What's up, everybody? Thank you for tuning into the channel. This is Corey with Invest Like an Old Man, and today I'm going to discuss the reasons why I'm not afraid of the market correction that we just entered. There are a lot of different reasons why I'm not scared, but ultimately, the stats I'm going to show you right now and the charts I'm going to show you right now are going to kind of confirm some of the things that I've been thinking. Before I go any further, make sure you like the video, subscribe to the channel, and share these videos as well. So I want to jump right into it. I'm sure you've seen the news, and you probably see that many of the major indexes have entered into correction territory because they're down more than 10%. So the chart I have up in the background right here shows a 1 month chart. So this is just 1 month for the NASDAQ. And this shows that, a month ago, February 9th, we were here and we were at 14,000, right? So we were right there at 14,000. And then now, as of today, we're down here at $12,609. So that's a significant dip when you take a look at that, right? That's a big drop. So we're down basically, if you look here, 10% for the 1 month. Now, here's why I'm not scared. The reason I'm not scared is I don't think it should have been this high in the first place. So let me go back a little further. Let's take a look at this chart. So 6 months. So even with the correction over the past 6 months, if you factor in the correction, the NASDAQ is still up 13.17%, even when you factor in the correction. That's a great return over a 6 month period of time. We got a little spoiled with these bubbles that were out there, and we were expecting that we were always going to get these returns, and that's just not realistic. And I don't regret selling, because just like if my house were to go up in value tomorrow really high, I don't plan on moving, selling my home just because it went up in value. I expect that it's going to go up and down, but I plan on being here for the long term. And that's how I view my investing. If you're going to be in the market for the long term, when you have a dip or a correction or even a crash, it's a great opportunity to buy more shares of the stocks that you like. If you're doing index funds, it's a great time to put more money in those funds or buy more shares of the ETFs, because ultimately it's going to go back up over the long term. But if you were counting the money before you actually cashed out, then it's not a feel good when you see the money, the NASDAQ drop or the S&P drop or the Dow drop. Now, I'm going to show you even further what I mean. I'm going to take it out to a year. So even with this correction, the NASDAQ is up 58.59%. Again, a dramatic increase, right? Part of that was due to the crash that happened, around March of last year. So if you look at it, it got as low as, in 6,000. But think about it. It was less than 7,000. And then in 1 year, it went all the way up to 14,000. That's insane, right? We're in the middle of a pandemic. There's no reason that the NASDAQ should have jumped from, less than 7,000 all the way up to 14,000. And anyone expecting that to, be sustainable long term is just, gambling and not really in it for the right reasons. So what I'll tell you is I still feel really good. 58% return over that time period is awesome. Final thing I'll show you is even though the stock market itself is down, we have to keep in mind that a lot of this is down because of a few companies. So when you look at the NASDAQ in particular, the NASDAQ is comprised of these large companies, but let's look at the 10%, the top 10 holdings. The top 10 holdings comprise 55.2% of the NASDAQ. So you look at Apple, 13% of the NASDAQ, Microsoft, 9%, Amazon, 9%, and even Tesla at 4.89%. The big thing is if these companies take a dip, which we know Tesla, Amazon, and Apple have taken big dips, then the whole market is going to go down. But not every stock in the stock market is going down. It's just these stocks represent so much of the NASDAQ that it looks really bad. So I'm going to be really quick. Just make sure you keep your head in the game. You don't panic sell, that you hold on, and you look at the bright side. The bright side is that you still got great gains when you look at this chart over a long period of time. So thanks for watching the video. Again, like, share, and subscribe.